All right. So today we'll be talking about two things. It's going to be liquidity again with highs and lows and just getting more into depth with that. And we're also going to be talking about how to take a loss properly because I think that's very important. I remember when I first started trading, my losses were like my whole ego was just destroyed if I took a loss. Additionally, it's very important you don't take losses that affect your mindset, honestly. You don't want it to. Anyway, let's just get into it. So, we're going to be talking about first liquidity, and then I'll throw in some parts about how to take a loss because I feel like that's honestly more important than strategy. If you know how to take a loss and don't completely shift your whole mindset, shift your whole strategy off of it, then you're going to be pretty good. I remember what the first time I took a loss, I was like, oh yeah, I was just looking on trying to find another strategy, not sticking to mine. I was like, ugh, this doesn't work. Let me find something else. Let me find something else. Listen, sometimes it's just maybe sometimes you'll stick to your strategy, it just doesn't work out. Nothing's 100%, and it's so like it's not encouraging at all, but you have to get used to it kind of when it happens. And if you could just, the hardest part is staying disciplined to your strategy while you take a loss when you're re entering a trade and knowing, oh snap, last time I took a loss, hopefully that doesn't happen again to me. It's very scary, but you have to just be able to find a way to bounce back. Anyway, liquidity, right? So you guys already know that liquidity is always above highs and lows, highs and lows. So the most another important part with liquidity is when there's untapped liquidity like this. You see how these highs aren't tapped, like it's not like this where it's swept. It's a bad depiction, but for example, I was looking at these highs as high confluence because one, two, three, four, five, six candles until it was swept, right? So we kind of knew once it came down here, swept out these equal lows, which was high confluence, we could go into a lower time frame, find some form of entry, right? Swept out these lows, then it came down a little bit more, broke structure to the upside, inversion this fair value gap, came back down into this order block. We'll talk about that in the next video. And then it didn't tap it here because it's setting up resistance for retail traders to think that this is going to be a trend line or some form of support and resistance theory that I'm just really not concerned with at all because clearly it doesn't work. They're seeing these highs as like zones of support where it's not going to get tapped, but actually it's building liquidity. So eventually they were going to get their stop losses hit here, right? This is all the buy side. So liquidity is pretty much just orders in the market. So when you see highs like this that haven't been swept through and these equal lows, you know that the market's going to eventually come down or come up to these highs because that's where the market targets. That's the number one thing that the market targets is highs and lows. But for example, let me see. So you could see I'm giving you my overall thought process of where I think the chart's going to be going within the next couple of week or two. My overall guess is going to be towards the downside. Why? Because you have this low here, you have this low here, and you have this low here that has never swept each other. And you even have this low. Now, if it came down like this, came down, swept all of this, and then went up, then I wouldn't be too worried. But since it left these lows, I feel like it's on its way down. It's like this is how I look at the chart. I see this minor high here. This is a 1 hour high. It swept that out, so you could go into a lower time frame, and you could have entered in short over here off of this 1 minute inversion. And as you can see, every time it taps in, it respects that fair value gap. You put your stop above the high. This is how you know where to put your stop. you don't want to put your stop. You don't want to enter in short like this. Let me show you an example right here. So over here, right, and you get this inversion. Why would I not take this inversion? It never swept the liquidity I want to be swept. So never put your stop, for example, never put your stop above or right next to a high. Now, if it swept out this high, then I would say, okay, good. But in one of this 1 hour, it already swept it out, so it shouldn't. If it was a valid sweep, it shouldn't come back to this high. This, it shouldn't come back. But additionally, there's minor liquidity like these lows here. All I'm gonna say is take this, right? First off, this could have been TP1, but take this for notes, okay? And make sure you write this down. The higher the time frame, because you have all of these time frames, 6 months. You don't look at these, but wow, look at that 6 months candle. Look at this 6 months, insane. But anyway, I used a 4 hour and stuff. The higher the time frame, for example, 4 hour, 1 hour, daily, those highs and lows are gonna be higher probability than a 1 minute, a 5 minute, a 15 minute. Always use the higher time frames as an overall guidance, right? So today, obviously, you see we get a little bit of a retracement up into this 1 hour. The issue is I wouldn't like this trading day because we're looking for these lows to get hit. So this has a lot of orders. For example, let me just put it this way. People that don't follow like the strategy I follow, which is SMC and all that, they look at this, and this is how retail traders think. People that trade like retail theory and all that, they look at this as support because these lows, these candles aren't going past these lows, right? So this is a support area. But for us, we look at this as a liquidity area. We've been sweeping out these highs here. And so finally swept out that high. Inversions. Now we're playing within this fair value gap. But I do think it's going to get closed. I don't know. Did it close it on ES? Oh, wow. ES has a big gap. So that's called the liquidity void, by the way. But still do feel like it's going to come back down to here, at least into this area. And who knows, eventually it could retrace all of this because you see there's plenty of untapped lows. But right now we're in a bull market, so. Oh, wrong chart. Anyway, so I'm going to use this as an example. Now, as you can see, it's been sweeping out lower lows, and there's probably going to be more context, obviously, in the chart, whether there's a fair value gap or some form of bullish PD array or a higher time frame liquidity sweep than these. But we are anticipating this high, and this high to be swept. So usually what it will do when it's been going in this pattern, once there's like a higher time frame PD array or high time frame fair value gap or high time frame liquidity sweep, then we will anticipate these highs getting taken out because these are low resistance because this one never swept this one never swept this one. None of these swept each other. So we can anticipate that happening, right? And this gives like recall to ICT strategy, the power of three. And what that means is that when the market's consolidating and accumulating like this, like you see how this is just choppy, sometimes it's going to come down like this underneath all of these residing lows, hit all of it, and then retail traders will see this as a breakout and they'll enter in short. They'll enter in thinking, oh, it's going down. It swept out all these lows. It's going to go down. They're trying to follow the pattern. They're trying to follow the market. And then the market instantly reverses and goes and sweeps out these highs. This is called the power of three. You have the accumulation. You have the manipulation here. And then you have the distribution right here. I already spoke about that before in previous videos, but it all runs off liquidity. It all runs the same thing. So if we're looking at it like this, right? This is the 4 hour. We've been just having constant bullish reactions. Higher highs, higher highs, higher highs. News, news, news. But now I feel like we're at a point where we could end up rebalancing all of this. And even rebalancing this. It depends how low it wants to go. But now, here's an example of why I think it wouldn't have swept out this high. Because first off, we had this low and this low. These are relatively equal lows. It swept it out. Inversion, you can enter in long here and ride it all the way up to this next form of liquidity. And why did I think this leg here? Why do I think this leg is not going to come all the way down to this low here? And the reason is because it already swept out this sell side. If this ended up going like this, then I would anticipate it sweeping out all of that generated sell side. But it swept it out, so we knew that it could we could use one of our tools, equilibrium, look for the discount range, couple that with a fair value gap. So we're in a discount, and there's a bullish fair value gap. See how it perfectly respects this one? Comes into it, gives a bullish reaction, and flies way higher. For another example, why do I think this low wasn't going to get taken out after this buy side sweep? Why did I know that this was going to be bullish? Because these lows were all generated for this liquidity sweep. So it completely swept it out, moved higher. And example for this one. And you may be asking about this. This was a Newswick. But you have all these generated lows, 4 hours, swept it out, inversion, went higher, went for the next buy side. But what do we see here? It didn't sweep out anything over here. It just kept making higher lows, right? And when there's higher lows like that, I know that it's going to eventually come back for them. These I weren't too worried about because they were taken out eventually. And so I'm waiting for these lows to get taken out. And then, if it wants to be bullish, it could be bullish, but that's my overall bias. And as I said in the beginning of this video, what did I say? We saw it pushing up. I said, I know it's not going to come back to this high. It comes back into the yellow box, gives you another chance to entry. Created these equal lows. This will definitely get hit. I'll pause the video and probably come back if it gets hit in time, but these will definitely get hit. Now we can talk about how to take a trade. I've lost so many times. I've won so many times. Taking a loss wow, I guess it's just going to be a lucky guess if this gets taken out, huh? Anyway, I've lost many times. I mean, everybody has. But it's the way you take the loss. You know how many times I went to switch up my strategy when I lost? It was unbearable. You know how many times I just want to stop trading in general, or just oh, this is too risky, or this shit doesn't really work. None of these concepts work. None of this makes sense. You got to be able to just keep staying disciplined to your strategy and performing with it properly every single day. As we could see in the middle of my discussion, I knew what was going to happen here. We had the sell side liquidity be swept. Now, if it wants to go lower, there's still more forms of liquidity, but I called it out per usual. It swept out this high, inversion fair value gap, tapped in it multiple times, and went for the sell side liquidity on the opposing side. Now, you could say it's guessing or it's lucky, but I mean, it's playing out every single day in front of us. It's just truth. It's just the way the market's running. Anyway, back to how to take a loss. Do not, and I promise, do not take a loss and be down and just give up and change your strategy and lose faith in yourself. Do not take a loss that way. Take a loss how you take a win, and do not celebrate when you win. Do not. You have to be stoic through the whole thing. You take a loss, this should be your face. Whatever, right? You take a win, this should be a face. Whatever. Nothing should change. You got to win and lose the same way. You have to be robotic. You're reading candles on a chart. They don't care about your feelings. So stop showing them because you're only hurting yourself when you're trading and doing that. Take the loss, take the win, be emotionless about it. Do not, please, just stop. Stop giving into it. Stop giving into those happy feelings and those sad feelings. Oh, I took a loss. Oh, I need to change my strategy. It doesn't work. Or oh, I took a win. Now I'll be overconfident. Stick to your strategy. Be robotic. Be a straight robot. You see your strategy play. You see the liquidity sweep. You see the inversion fair value up. You see the tap inside it. Target the next sell side liquidity. That's it. No matter how you're feeling. No matter, oh man, I don't have that much money in my account. I don't want to risk this trade. Maybe it's not high profit. Take the trade. Take the trade. Or if you think, oh, it's bullish, oh, let me get in on a bullish reaction, even though it goes against your bias and goes against your overall way you're leading it for the day. Don't take that fucking trade. Don't fall into any temptation. You have to take a loss. You have to take a win. You you can't change your strategy over your emotions. You can't give into these thoughts over emotions. You can't. Anyway, just please keep that in mind because once you start, and the reason I'm talking about taking a loss because it's harder. It's obviously hard to take a loss than it is to take a win. Taking a win is easy, right? You're like, oh yes, I won. Now I get some bread. Whatever. Taking a loss is harder, but you need to react the same way to both of them. Whether you take a loss or you take a win, react the same exact way. That's it. You have to be a robot. You have to only execute off your strategy. Whether it works or if it doesn't work, you have to be determined and you have to be focused on that area. You can't change your strategy because you're feeling emotional, or else you're ultimately gonna fail. That's why most fail. That's why most traders fail because everybody's way too emotional for trading. Don't move your stop losses. Don't move your take profits if you think it's gonna run longer. If it runs longer, let it fucking run. Take your money. If it's about to hit your stop loss, don't push your stop loss back. Keep your stop loss there. Trust your strategy. There's been so many times where I moved my stop loss or I've exited trade before it hit it and it never hit my stop loss. You just gotta learn from it. But anyway, good luck trading.